Look at this line right here on the gold market chart. Most traders see this and think they've found the holy grail of day trading. Price crosses up, they buy, price crosses down, they sell. And yeah, sometimes it works. Like right here on this gold trading chart. Price crosses above, hits target, crosses below, hits target again. Looks perfect, right? But here's what nobody tells you about trading in the financial markets. Watch what happens when the market does this. Crosses up, fake out, crosses down, fake out, crosses up again, another loss. You're building capital and you don't even know why, because this isn't a trending market anymore. It's sideways, and that simple crossover approach just turned your account into a slot machine. So before you close this video, I need to show you something, because what I'm about to walk you through isn't another moving average tutorial. It's a complete scalping trading strategy with built-in risk management that filter out exactly these kind of traps. This professional trading system is commonly used by traders analyzing the gold and forex market during active trading sessions. But first you need to understand what this line actually is and why most people are using it completely wrong. This isn't just a moving average, it's called a VWMA, or volume weighted moving average, combined with a triple EMA structure. What it does is it weighs price data based on volume. So when a big money moves in the financial markets, this line responds. When retail traders panic, this line ignores the noise. It's calculating the average price weighted by how much volume traded at each price level, giving you a cleaner picture of where institutional money is actually positioned in the gold market. Now here's where everyone messes up with this day trading strategy. By default, this thing is set to 20 periods. And at 20 periods, you get what you saw earlier. All those fake crosses, all that chop. So we're not using 20, we're going to 200 periods. Watch what happens when I change the settings. The line smooths out completely. No more erratic movements. No more false signals every 5 minutes. This is now showing you real trend, not the noise. But hold on, because even with this smoother line, we still have a massive problem with this trading system. This line generates signals. It tells you when price crosses, but it doesn't tell you if you should actually take that trade. And that's the difference between a signal and a setup. A setup is a filtered, confirmed, high probability trade. And to get from signal to setup in this professional trading strategy, we need one more thing. Look below the chart. This is called the True Strength Index. And no, this is not another RSI. It's completely different. That True Strength Index measures momentum by comparing recent price changes to overall price changes. Then it double smooths the data to filter out noise. What you are seeing is the actual strength behind price movements in the forex and commodities trading markets, not just whether price went up or down. It shows you if buyers or sellers are actually in control, or if it's just random movement. Now by default, this trading tool comes with two lines, the TSI line and the signal line. But we do not need a signal line in this scalping trading strategy. We already have our signal from the VWMA. What we need is a filter for capital protection. We need to know if the momentum supports the trade or if we're about to walk into a trap. So we're making some very specific changes here. First, go to the Style tab. Change the TSI line to yellow. Then change it from a line to an area. This makes it visual. You can see momentum filling up or draining out. Now disable the signal line completely. We do not need it. Next, input tab. Long length, change it to 200. Short length, change it to 100. Leave signal at default because we disabled it anyway. What it does is it syncs the momentum calculation with our 200 period VWMA. Now both tools are reading the same time frame, the same market structure, and this gold trading strategy. They're working together, not against each other. And here's the key concept you need to burn into your brain for this day trading system. When this yellow area is above zero line, momentum is bullish. When it's below zero, momentum is bearish. That's it. That's your permission slip. If momentum is bearish and you're thinking about buying, stop. If momentum is bullish and you're thinking about selling, stop. This technical analysis approach just saved you from half of the losing trades you won't taken. Now let's put this together into an actual trading setup with proper risk management. First, look at the trend strength index. Is it above zero? Yes. That means momentum is bullish, so we're not looking for sell trades yet in this forex trading strategy. We're watching and we're waiting. And this is the part that kills most traders, the waiting. Because while you're waiting, price is moving and your brain is screaming at you to do something, but you don't. You wait. Now watch the price action. Price crosses the VWMA, and here's where beginners make the mistake. They see that cross and they buy immediately. But that cross doesn't mean enter. It means consider. It means maybe. It means pay attention. But do not touch your mouse yet. Because now we need price action confirmation in this professional trading strategy. Look at the most recent swing high. That top right there, market, that's your line in the sand. If price has the strength to break above that level, it means the momentum is real. It means buyers are in control. It means this isn't fake out. So you wait, you watch, and if breaks that high, then and only then you enter the buy trade. But you're not done, because even a good setup can destroy your account without proper capital preservation. Never risk more than 1% of your account on a single trade. Set your stop loss at the VWMA line or at the most recent swing low, whichever is closer. That's your exit if you're wrong. And your take profit, set it at 1.5 times your risk. If you risk 20 pips, you're targeting 30. If you risked 50, you're targeting 75. This risk management approach keeps your risk reward in your favor even if you only win half of your trades. Now for sell trades, and this scalping trading strategy is the exact reverse. The true strength index below zero, that's bearish momentum, so no buy trades. Wait for price to cross below the VWMA line. That's your signal to consider, not to enter. Now mark the most recent swing low. If price breaks below it, that's your confirmation. Enter a sell trade. Stop loss at the VWMA or at the most recent swing high. Take profit 1.5 times your risk. Same rules, opposite direction. And here's what makes this professional trading strategy actually work. It's not indicators, it's not settings, it's the fact that you're waiting for confirmation. You're not trading every signal. You're trading setups. You're letting bad trades disqualify themselves before you risk a single dollar of capital. That's the difference between gambling and trading.